Hello. Mic test. Hello. Okay, so the mic is working fine. So hello guys and welcome to the 69th edition of the Trading Opportunities webinar. This is Nirav, and before I proceed, type something in. So yes guys, whenever you do join in, make sure to say hi, hello in the comments. And before we proceed, let me just quickly go over the legal disclaimer here. Suggesting all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use presented here for your trading or investing, you yourself will be liable for your loss, loss of profit, etc., etc. Read the whole stuff here, right? So, with that being said, hi. So, with that being said, let's now get started very quickly with our webinar. And yeah, very quick introduction for those of you who are new here. My name is Nirav. I'm the admin and owner of the YouTube channel 50 Eyes Market Analysis, as well as the website 50eyes.com. And this is the 69th webinar. We generally do these webinars once per week, right, on Friday. And the timings are 7:30 p.m. IST to PM GMT. So far, in the 67 webinars that we have done, we have been able to capture 89 plus big moves. So what happened with the 68th webinar, we will discuss today. This broadcast is also being done on LinkedIn Live, right? And lastly, I do have a very decent track record or unmatched by industry standards track record of 80% plus accuracy for since 2016, as you can see here. 17, 18. You can check yourselves by visiting 50 forward / forecast accuracy and scrolling through these Excel sheets or Google Sheets, whatever you would like to call it. With that being said, let's now get a quick rundown of how this webinar will proceed. So generally what we like to do is we like to go over the charts of Euro USD followed by crude, gold, S&P, and then Nifty, and then BTC. Once I discuss a chart, I will ask if you guys have any doubts or questions. If you do have any doubt or question, you can just type in the comment section. And with that, I think we have covered all the bases. And yeah, before we proceed, one very quick announcement that the private Slack group is now active. If you are interested in continuous coverage, then you can just contact me via the contact us page on my website 50eyes.com / contact us, or just visit the website and click contact us and subject matter private group. Right. Currently, we are doing very nicely in the group, and I've been able to capture the whole move of gold. I will quickly discuss that when we are on the gold chart. But as you can see, I was not only posting the chart updates, but also my own trades. And many of the people who are in the group have also been able to take them. So, with that being said, let's now head over to the actual webinar, and we will see the gold trade when we reach the chart of gold. All right. So, hello, Hari. So, in that case, let's now first of all discuss our chart of Euro USD. So, Euro USD chart, there it is. So the count is currently suggestive that more upside can be expected. By the way, I have a long position on Euro USD, which is currently in the market. I may or may not carry it overnight, but it is currently there. Let's now see what is the bias of having a long position here. First of all, when we discussed it last time, also our view was that if this market is going higher than 1.09, then we expect it to go and take out the high of 1.10939, which is basically the most recent high or this level. Now it has been in a continuous upswing for now, Two possibilities are currently existent here. The first being that we have seen or are seeing a flat kind of correction, which will be followed by upward movement. Second possibility is that this whole thing is a possible triangle, which again should be followed by another upward movement. And since both of my own analyses are suggesting upward movement, I have entered a long position here. Right. So nothing new or fancy here. I will look to add more if this market goes higher than 1.10086 or basically somewhere near this level. And I'll be cautious and look to or at least consider bearish possibilities if it goes below 1.8048. For the upside, it is pretty clear if it breaks the high, then it has broken this BD trend line of the triangle. So once the BD trend line is broken, we expect more upside to be followed in this market. So hence the upside buy is very clear. Secondly, if the market is resisting strong possibility to the upside, then going lower than this level of 1.086, 1.080 is a warning sign. So that's why I have an alert there. Nothing really much to add here. Again, guys, if you have any doubts, just type in the comment section. If not, just type in clear understood. And we'll now head over to our next chart, crude oil. Crude oil is not really behaving as expected at all. Our main bias was that we expected this market will form. First of all, we were thinking it will form a base here and then go up. Then when it gave this low, then we were again thinking that perhaps the sideways movement is continuing as a complex and it will go up, but it is a very reluctant, a lot of selling pressure incoming near the highs. So I'm bound to believe that maybe this analysis is more pegged towards the downside. So keeping in mind the bearish possibilities, I think if the wave Y was here, is our bearish count, then perhaps this market is doing a triangle kind of count, right? In which case we can see a downward break. Again, I'm not very clear on this count. Both ways, it is low, like what do you call less likely possibility. Even if it's a triangle, it can still go or continue to go sideways within this range, right? Since all these possibilities exist, I am currently staying a little bit away from this counter, unless, of course, it's a very short term trades. I'm not taking any major positions in crude oil. But do keep in mind that I will be interested in longs again if it crosses 72.97 to the up. Sorry, 72.88 to the upside. On the downside, of course, it is 65.6, roughly speaking. If it goes lower than this low, then perhaps I'll look to add some shorts. Overall, I'm just on the sidelines on crude and not very interested. So now let's head over to gold, where I will quickly run through the trade I captured, the short trade I captured. So 1 second, let me see where was the post. Yes, so here is the gold. I'm not going to go into too much detail because uh, these are trades that I discuss in thoroughly in my group in private updates. But I'll give you a quick rundown or a quick glance of what kind of discussions go in those webinars or what do you call private updates. So as you can see here in the Slack group, this is the gold channel, and on June 28th, I have already suggested that we are expecting 1911 and perhaps lower levels. After that, you can see that I have already booked the profits on my shorts because I was carrying short positions before that since June 15th. And after that, you can see closed, and then I'll re-enter on 22nd, and then exit, and then I'll also do some scalps. So what I'm basically showing off here is that we are discussing, not discussing, I'm basically throwing the whole count as well as my entry and exit here in the group, right? And this is not just for gold. Of course, gold is just one chart. We are also covering all the other major pairs. So last position that I exited was the trail. Yeah. So I had a trade which was in profits since 1926 levels, and I had moved the trailing stop loss to 1916. So finally I exited with 10 points profit when gold started to go to the upside. So the point being, if you are interested in serious coverage of these markets, or what do you call live coverage, I should say, or continuous coverage, then you can have access to the group upon request. Currently, it's not open to everybody. You can send details 50hours.com/contact dash us, subject matter private group, right? And I'll revert back to you. So that's about it for the quick, not quick, but about the trades that I took in this week on gold. Now let's look at the current situation. Current situation suggests a little bit of unclarity, but one thing is clear here, that the downside possibility still exists. However, it is also clear to me that even if the downside possibility exists, the chances of it going straight down are a little bit on the lesser side. What I expect is that this market will continue remain sideways for at least let me see, for at least next 3 4 sessions. I'm expecting that this market will, or maybe even the next whole week, it will remain sideways for continuing down again, if it continues down. So why am I saying all these things is because while the count is suggesting that the wave 3 is complete, wave 4s are quite well known to consume time and become cumbersome or complex. So that's one reason I'm expecting maybe more sideways movement. Secondly, this count is also not the strongest possibility at this point. There is the possibility that this market, from the price level of 2079, has been in a complex correction to the downside. In which case, the whole impulsive count will be relegated and it will be switched with WXY counts, which I think I have discussed in the last webinar, right? In which scenario the minimum downside target has already been hit. I think this one was even discussed in the last public webinar, 1911 or 1913 level actually, right? So since the bare minimum has already been hit, that brings me to the second possibility that perhaps this market can go higher, and for that I have placed an alert firstly at 1956, right? So if it goes higher than that, then I'll be considering that possibility with more seriousness. So long story short, gold, the downward movement, we were able to capture point to point every single turn. But at the current point in time, it is not clear which count it is following. And the movement also is unclear on a shorter time frame. So I'll just wait and watch on gold. No new trade here for the time being. Important levels to watch out: the upside 1956 and downside just the low around 1913. Let's quickly head over to S&P, where I have made a small update to our last count. So S&P, last time when we were discussing, my view was that more upside is possible on this counter, and more upside is possible in the sense that we were expecting that there was a wave 5 orange degree remaining. Perhaps I did mention it that it is also possible that the orange degree is complete, but I'm not so sure what I said in the last webinar. But nevertheless, the updated counts suggest that wave 4 of red degree, this dot 3 dot 4, is in progression. And with that in progression means this the market can go as low as 43.20 before taking any upward movement. It can of course reverse from the current levels, but yes, more downside till 43.20 is possible. So I will be a little bit cautious here and wait for it to go and test that downside level, or give me some clear bullish evidence on the upside. Right now, it is unclear what should be constituted as the clear trade setup for the upside, but yes, if it takes out the high, then that's the clear setup for the upside. But other than that, currently I'll just wait and watch because one second. So currently I will wait and watch because this leg down can be counted in two, three different manners. I have checked it on the shorter time frame. That's why there is no labeling here. So as I said, it is possible that it will either go down and then up. 43.20 is the level. Secondary possibility is that it can just go up from the current levels or whatnot. So that is unclear. So nothing to discuss there. Of course, I will do continuous coverage of these markets in the private group. But that's about it for our public coverage. S&P. Let's quickly head over to Nifty, which again, by the way, is moving precisely as expected. Like literally, it is moving as expected. So first of all, let's quickly see what we discussed in the last webinar. So in the last webinar on Nifty, what I said was that I was expecting a diagonal maybe forming, and if the diagonal is forming, then we can see some downward trades or bearish trades, I should say. And there were two types of setups. There are always two types of setups. The aggressive ones take the break of the red trend line, which is, by the way, not a very standard setup. And the second one, the conservative setup, is to take the shorts only at the break of the white trend line. So currently what we are seeing is the white trend line market has broken and closed below it. But the clear close is not very huge and not completely convincing. So what I have done is I have not taken any short entries, rather just placed an alert. I'll just actually should move it a little bit up. So I have my alert placed around 18,622 level. Below that, I'll be interested in short-term sell-off. That is basically intraday selling opportunities. And if things go down, then we expect the market to go to 18,460, perhaps even 18,400, right? But on the bare minimum side, it is expected to go to 18,590 level. So that's why I'm saying more intraday kind of thing it is, because even if it hits the alert, I will have a few points I can make on this downward movement. And generally, I've seen this target minimum might or generally will exceed a little bit at least. So nothing major or huge here. The counts are being followed, but since the downside possibility is only a short-term pullback or a corrective structure in the bigger upward direction, hence we will remain cautious and only take small entries or small positions, I should say. With that being said, Nifty, I think I've covered. Again, guys, if you have any doubts or questions, you can just type it in. While we head over to our last chart, BTC, where I also again have taken some positions. So BTC, last time when we discussed, we were of the view that this market was unclear. I'm very sure I mentioned unclear, and I had left it to wait and watch. What later on happened was that this market gave a strong rally, not just a strong rally, but also tried and tested the last known high. It is almost at that level. So this is a sign of bullishness in my understanding of this counter. And this basically means that this market can go a little bit sideways and then follow up. My major count here is this. As you can see, I am thinking that yes, I'm thinking that this market is probably forming an impulse in the upward direction. Currently inside a wave 4 of the circle degree, which will then be followed by the wave 5 up. So basis of that, I have entered partial long positions, not the complete longs. I will add more as the market keeps going higher and takes out my alerts to the upside, which are around 30,840 each level, and so on and so forth. Secondly, as we already know, a correction going on can also go deeper. So that possibility is considered by the level 29 to 37. So if the market is around this level, that is an expected level, and I'll possibly look for a reversal and adding more longs. Right. Long story short, we expect this market to break out the high quite soon. That's our main hypothesis. Hypothesis one. Secondary possibility is that this market will remain sideways for quite some time, maybe propagate within this huge or big range, which is around 31,200 something to 25,000. Even if it does that, I can still hold it because my current entry is not very big. It's only partial longs I am in. So, with that being said, it's a swing perspective long and short term perspective. I am thinking long, but we do not have the 100% confirmation. So, that's why my entries are only partial. With that being said, I think we have covered all the major points we wanted to cover in regards to all these markets. And lastly, guys, again, if you are interested in becoming part of our private group and receiving all these entries, then do keep in mind currently I am taking these entries based on request basis. After a short period of time, once we have the complete number of people or participants, I am deciding to make the group completely private and only take entries on need to basis, right? So basically, it will be closed after the required number of entries is complete. With that being said, if you missed it during the webinar, you can send your requests by visiting 50s.com // contact us and tapping the subject matter as private webinar. And with that, I think we have covered all the bases. And it was nice to see you guys here. And make sure you hit the like button and share this webinar if you found it helpful, because that really helps the YouTube algorithm keep the things moving, right? With that, let's just end this webinar. Thank you for joining in, guys, and take care.